The International Monetary Fund has raised its growth forecast for the US but cut them for China, warning of risks from conflicts, trade wars, and high interest rates. The United Nations major financial agency published its latest World Economic Outlook, which estimates that global GDP will remain at 3.2% this year and next. Finance leaders have been gathering in Washington, D.C. this week for the IMF and World Bank annual meetings. Benji Hyer reports.
Global growth is expected to be stable yet underwhelming. That's exactly how it's described by the International Monetary Fund, which says that GDP will fade to, quote, mediocre levels within 5 years. It's hardly the brightest of projections, yet there are reasons to be optimistic. Major economies, the United States, India, Brazil, are all facing a soft landing, according to the IMF's chief economist. In other words, inflation has cooled, but a recession has also been avoided. It looks like a global battle against inflation has largely been won, even if price pressures persist in some countries, says Pierre-Olivier Gourinchas.
The battle against inflation is almost won. After peaking at 9.4% year-on-year in the third quarter of 2022, we now project headline inflation will fall to 3.5% by the end of next year. In most countries, inflation is now hovering close to central bank targets. Now, inflation came down while the global economy remained resilient. Growth is projected to hold steady at 3.2% in 2024 and 2025.
It's a far cry from the state of affairs just a few years ago, when the world was in the midst of a crippling pandemic. Here in the US, growth is set to slow to 2.2% next year. That is still better than the central bank's forecast. However, the IMF predicts that elections could introduce a high level of uncertainty. Donald Trump, whilst not mentioned by name in the World Economic Outlook, has vowed to impose huge tariffs on imports from China if he is elected president. The IMF, meanwhile, revised China's 2024 growth rate down to 4.5% for next year, as the economy there remains burdened by property weaknesses and languishing consumer confidence. India, though, continues to post very strong numbers. 7% this year, 6.5% in 2025. Benji Hyer, CNA, Washington.